Joining us now is Emily Zhao, Managing Director at Salesforce Ventures, Daniel Docter, Managing Director at Dell Technologies Capital, and Julia Moore, co-founder and Managing Partner at Breakout Ventures. Great to have you all on today. And I'd love to know what you're looking at, and presumably I think we can all just say we're kind of operating in the AI universe here when it comes to venture capital. But I would love to know what part of the ecosystem you think is most appealing. Emily, why don't you kick us off?
Yeah, for sure. Thanks, Dani. I think over the last 3 to 4 years, we've been very actively investing at the infrastructure layer of the AI wave, including companies like Anthropic, Together AI, Crusoe, 11 Labs, Runway, and many more. I think looking forward, what we're most excited about is bringing AI into the physical world, which is actually a lot harder than bringing AI into the digital world with a lot more friction. That's why we're excited to be investing in robotics in companies like Mind Robotics and Physical Intelligence.
Julia, let me bring you into the conversation because I have a feeling you might think something similar. Is the next wave for you and the most attractive opportunity also in the physical space for AI?
Yeah, so we're an early stage investment firm and we focus on the frontier of science and technology. So the physical world is cells, biology, chemistry, a little bit different, including sort of robotics. And so when we think about we've watched this massive AI infrastructure play out over the last couple of years, and that next wave goes to whoever has proprietary data and a durable moat. So the sectors that we operate in, typically life sciences and industrial technologies, those are sectors that generate massive proprietary data. They sit in regulated markets with high switching costs, and they're full of inefficiencies that are still waiting to be mined.
Daniel, what are you looking at?
Well, thank you very much for having me on today. Dell Technologies is an early stage venture capital fund, so we do seed and Series A, and we're very enterprise focused. So cybersecurity, AI, developer tools, everything in the data, and of course, the world of AI today. Within AI, there's a couple of areas that are getting a lot of attention, in part because there's huge amounts of dollars flowing into them. That was mentioned by Emily, which is the inference and the compute infrastructure to provide inference and training, shifting from training, looking back to inference going forward. And of course, the other really big area is reinforcement learning, which is the whole category of using data to help all of the models improve and get smarter and smarter.
Daniel, let's talk about some of the risks, because I want to pick off of what you said. What is the risk to that universe, though, that the large LLMs just kind of do it themselves? Why would an independent startup really be able to do something like that better than these large established companies?
Well, there's a couple of risks in terms of investing in the space right now. So, it feels like, we are in a massive wave. So everything is being priced to perfection or priced as if everything is going to be the ultimate winner. There can only be a few ultimate winners. The power law still exists. It always has existed in venture capital and, frankly, most industries. And so I think the big risk is there will be a few winners, and there'll be many companies that are not able to get to the finish line. But there's really great opportunities to do things in and around the large model companies, and a lot of the things that we were talking about. The large model companies are, in fact, the largest customers of most of these companies.
Right. Emily, what do you think about this idea that everything is priced to perfection? Is there enough differentiation in valuations across the AI universe?
Yeah, I think historically speaking, valuations have always been relatively high for the best companies in the startup space. Those companies command a premium on the valuation front, and they may be slightly ahead in terms of their commercial traction, or slightly ahead in terms of valuation compared to their commercial traction. But I think what we do at Salesforce Ventures is very much betting on the founders with the vision of generational outcomes. So paying up for that, the best outcomes is worth it. And we still have the same level of rigor when it comes to looking at the type of investments we're making in the AI space. And that's the best founder quality, the size of the market opportunity, and an attractive return profile.
Julia, how do you see this debate over valuation shaking out?
I think the valuation piece is hard because if something is already successful and it's priced in, is that really venture in its traditional sense? If we think about what is core to the venture role, is really that first principles thinking, underwriting what is contrarian today but massive tomorrow, and how much time do you have to price something before it's obvious or inevitable is really the question. And we, as early stage investors, are trying to get in early, and it really requires us to come with a prepared mind about what is contrarian now but massive later. In our space, obviously we've been talking about the physical world a little bit, bringing that same AI playbook that worked for language, but this time, for example, there's no internet to train on. We don't even know the mechanism, let alone have it captured in a tidy data set when you're talking about biology and chemistry. And I think that's an example of where you can have still a contrarian view early.
That's interesting, Julia. Does that mean that some of this industry maybe has lost its way and is kind of just following the pack when it comes to AI investing?
I'm going to have a specific angle on the world of AI because we work so much in the physical world and with cells and biology. Right. I think what maybe is worth noting is a little bit of that prepared mind conviction early of where space is going versus what you might see in later stage rounds right now. Something I've noticed, and I've been in the space and investing for the last 20 years, and you do notice a lot more of a momentum play as you get into the mid and later stage rounds, where it is you have a little bit of a harder time early stage, where if a generalist investor hasn't built their conviction yet, the space is actually moving faster than they can do work.
Yes.
That they kind of wait for the signal, and that signal's already priced in by the time we get to those rounds.
Emily, can I also get your take on that idea of the momentum following of the industry?
I think I disagree with Julia slightly, because we do invest at a later stage, and I do think the pace of deal making has dramatically increased over the last 3 to 4 years, because the tremendous tailwinds in AI are allowing startups to achieve their product and commercial milestones a lot faster than the previous generation of startups. So that means that historically, even though we might be investing at a later stage, from a timing perspective, it feels much earlier. So I agree with Julia in terms of having the prepared mind. We're constantly looking at what's the next frontier, what's the next thematic area we should be looking at. And because we're investing at the later stage, there's a lot more customer work that we can be doing. We can talk to customers of these startups to get the right feedback. And I think our secret sauce is also Salesforce Ventures has our own very large customer base we can tap into to help pressure test that product.
Hey, Daniel, I have 30 seconds, so I hate to do this to you, but where are you on this debate of momentum following
I think you're touching on a really important topic, which is the amount of time that venture capital investors have to get conviction about an investment and a founder, especially us early stage investors that do seed, is compressed dramatically. Just like the time to grow an AI company and get to scale has compressed dramatically. So you really have to leverage. We leverage our expert networks, and we leverage our relationships with Dell to help us get conviction, build conviction about early stage founders as fast as possible.